Imagine a company whose stock price just explodes, over 400% in a single day.
Hmm.
But here's the kicker. It wasn't because of earnings or some breakthrough product. It was a single strategic pivot, a massive shift that instantly reshaped their entire identity. And, well, it sent their market cap into a totally different league.
Yeah.
That's exactly what happened to Bitmine Immersion Technologies, ticker BMNR, right around June 30, 2025. So today, we're taking a deep dive into this huge transformation because, honestly, what you'll find out about its valuation after this pivot is, well, it's pretty astounding.
It really is.
Our mission today is to understand not just what happened, but what this massive shift means for the company, its place in the market, and what you, as someone trying to learn, need to know about this really high-stakes bet.
You've absolutely nailed the setup there. The market re-rating for BMNR wasn't about operations. It was driven by this $250 million private placement.
Right.
But crucially, this money wasn't for buying more Bitcoin miners. It was specifically to acquire Ethereum, ETH, and make that the company's main treasury reserve asset.
Wow.
So this move basically transformed Bitmine from, a tiny microcap Bitcoin miner into, effectively, a publicly traded way to get exposure to the Ethereum ecosystem.
And here's where it gets really interesting, especially for the finance folks listening. This wasn't just any capital raise, right?
Right at all.
It was led by MOZAYYX, and look at the names involved. Founders Fund, Pantera Capital, Kraken, Galaxy Digital. These are serious blue chip investors.
Top tier.
And the cherry on top, Thomas Lee. Founder of Fundstrat Global Advisors, a really respected Wall Street strategist, is the new chairman of the board. That's a huge stamp of approval.
Massive credibility boost, yeah.
All right, so with that incredible context set, let's really dig into the nitty-gritty. What do they actually do now? Let's start with Chapter 1, Business Analysis.
Okay.
So before June 30th, Bitmine was all about Bitcoin. But now, like you said, it's completely flipped. What does that new core strategy actually look like?
You're right. The inversion is total. Before, Bitmine had this asset-light Bitcoin model. That meant some direct Bitcoin self-mining, mining as a service, or MOS.
Which is like hosting for others.
Exactly. Hosting for third parties.
Yep.
They also did synthetic Bitcoin mining through hash rate products, basically selling access to their computing power without selling the machines, and even some advisory work.
Okay.
The core strategy is purely Ethereum Treasury management. They're focused on acquiring and holding ETH as their main reserve asset, and they're not just sitting on it. The plan includes active yield generation, through staking and DeFi mechanisms.
So generating returns on the ETH itself.
Precisely. Which means their main KPI, their key performance indicator, has totally shifted. It's not about hash rate anymore. It's about increasing the value of ETH held per share. This fundamentally changes the whole analysis framework. They went from an asset-light operator to, well, an asset-heavy holding company, basically.
So, okay, besides being this ETH treasury, are they still doing anything else? Is there like an operational business still there, or is it purely an asset play now? What are the actual products and services?
That's a great question, and it's kind of both. From an investor's angle, the main product now is BMNR stock itself. It's a public market proxy for getting exposure to a big, professionally managed Ethereum stash.
Right. The stock is the product in a way.
Exactly. But they do have supporting operations. Their immersion-cooled Bitcoin mining still exists. They use proprietary systems, dielectric fluid for cooling.
That's the stuff that cools way better than air, right? Improves efficiency.
Exactly. Better thermal management, better performance, less energy use, longer hardware life. So that's still running. They also still offer hash rate financial products, data center and hosting services for others, and even corporate treasury consulting, leveraging their new know-how to advise other firms, maybe.
It sounds like just a meteoric rise, microcap to potential crypto giant, literally overnight. What did this actually do to Bitmine's market position and its scale?
It's dramatic, almost unprecedented, really. An overnight transformation. Before the pivot, Bitmine was a true microcap. Market cap around $28.4 million, maybe 1,500 miners. Tiny.
Yeah, really small.
Post-announcement, they're suddenly positioned to be one of the largest publicly traded holders of Ethereum globally. Its market cap initially jumped over $175 million, and some pro forma math suggests it could push past $1 billion.
Whoa.
And this re-rating was based entirely on its new role as this institutional-grade Ethereum vehicle. Not because they suddenly turned on more miners. It's a complete reimagining of the company.
Wow. So the company's value proposition, what it offers the market, has just completely changed then.
Totally. It's not about being an efficient Bitcoin miner anymore. Now they're offering this unique institutional-grade, professionally managed vehicle for public market investors who want exposure to the Ethereum ecosystem and its potential upside. They're essentially solving a problem for investors who want significant ETH exposure, but want it through a regulated, publicly traded stock managed by a team that now has serious credibility.
Yeah.
That just wasn't really available before. Not like this.
This kind of bold move doesn't happen in a vacuum, though. This pivot must be tapping into some really big market trends, yeah.
Absolutely. It hits several major trends at once. First, obviously, institutional digital asset adoption. I mean, this deal itself, with these premier funds backing it, is a landmark event. It signals a new level of mainstream acceptance.
Okay.
Second, the growth of the Ethereum ecosystem. Their whole bet is basically a direct wager on the application layer of crypto, smart contracts, stable coins, DeFi things that drive actual demand for ETH.
Makes sense.
Third is the convergence of traditional and crypto finance. That investor group perfectly embodies this merging of worlds, right? Traditional VC, crypto native funds.
Yeah, you see both sides represent it.
And finally, they are still operating within that challenging post-halving Bitcoin mining environment, which actually makes their immersion cooling tech pretty crucial for keeping that legacy mining part viable, even though it's now secondary.
Okay, so now that they're straddling these two worlds, who are their competitors, it can't just be other Bitcoin miners anymore.
You're spot on. BMNR is in a really unique competitive spot now. They're not just up against other miners. The most direct competitors are really any vehicle offering digital asset exposure. That includes the big Bitcoin miners, sure, but also companies like MicroStrategy.
Right, which became sort of a Bitcoin proxy itself.
Exactly. But BMNR's strategy is a deliberate split from that. While MicroStrategy and the big miners like Marathon, Riot, CleanSpark bet on Bitcoin as digital gold, a store of value, Bitmine is making a very public bet on Ethereum as the application layer, the world computer. It's just a fundamentally different investment thesis, comparing them quickly. Bitmine is ETH Treasury plus some BTC mining, potentially $1 4B pro forma with Thomas Lee. MicroStrategy, Marathon, Riot, CleanSpark, all BTC focused, different scales, different key strategists like Saylor or Thiel.
That's a really clear distinction. What about the regulatory side? How are they navigating that, and how hard would it be for someone else to just copy this move?
Well, being listed on the NYSE American means they're under full SEC scrutiny, strict reporting, which adds legitimacy. The $250 million placement itself was done under Regulation D, a private offering to sophisticated investors, avoiding the longer public registration path.
Okay.
But the broader digital asset world faces huge evolving regulatory uncertainty, especially for Ethereum or staking or DeFi, all core to their new plan. That's a risk.
Yeah.
And barriers to entry, they're substantial. For legacy Bitcoin mining, you need massive capital, cheap power, operational skill. For institutional treasury management like this, you need access to huge amounts of capital, and you have to navigate complex regulations. The key thing here is BMNR basically vaulted over that last barrier overnight by attracting those blue-chip investors and Thomas Lee. That's incredibly hard to replicate quickly.
Which brings us right to their competitive advantage. Given their history, where's the real edge now? Is it just the cash and the big names, or something else?
You're getting right to the core of it. Before this pivot, Bitmine's brand, negligible. Now, its competitive advantage comes directly from being associated with Thomas Lee and those new institutional shareholders. It creates this instant halo effect, immediate credibility.
Right.
In mining, yeah, they talk about cost advantages from immersion cooling, that potential 90% energy cost cut, and operating in places like Texas or Trinidad with cheaper power. But they still don't have the scale of the really big miners.
So the tech helps, but it's not the main thing anymore.
Exactly. Their most significant unique asset now is their strategic position as this dedicated institutional-grade, publicly traded vehicle for Ethereum exposure. That's a first-mover status. Secondary is maybe the immersion cooling expertise, but honestly, maybe the most important capability is simply their demonstrated ability to dream up such a bold vision and actually attract that elite capital and leadership. That itself is a unique strength.
That's a fascinating way to think about a company's assets, the vision and the backing. Okay, moving beyond the business model, it often comes down to who's running the show. So let's talk Chapter 2, Management Evaluation. How do we look at the leadership team now, given this huge pivot?
Yeah, you absolutely have to use a before and after lens here. Jonathan Bates is the CEO. He has a solid track record and seems like a hands-on operator in crypto mining, guided their growth, got them uplisted. He's still CEO, likely focused on running that legacy Bitcoin mining side.
Okay, so operational continuity there.
Right. But Thomas Lee's appointment as chairman, that's the most important management event, hands down. Co-founder of Fundstrat, respected Wall Street strategist, former chief equity strategist at JP Morgan, top ranked by institutional investor. I mean, the credentials are huge.
And just to be clear, this isn't the Thomas H. Lee from private equity?
What? Correct. Different person entirely. This Thomas Lee's involvement signals a massive shift in strategic control and direction. He's a primary source of this newfound market confidence. It looks like a strategic partnership. Bates handles operations, Lee handles the big-picture capital market strategy, and is the public face.
It's clear Lee brings huge credibility, but is there maybe a risk there? Like, are they too reliant on just one person now, a sort of key man risk?
That's a very fair point, and definitely a risk factor. The investment thesis is now heavily leaning on Thomas Lee's credibility, his reputation, his strategic guidance. If he were to leave for some reason, yeah, that could absolutely hit market sentiment hard. It's something investors have to weigh.
Okay. And transparency. How open has the company been, especially with this massive game-changing news?
Well, communication is mainly through press releases, SEC filings, standard stuff for a public company. But that June 30th announcement, it was notably transparent. They laid out the placement size, the price, $4.50, the use of proceeds, buying ETH, the new focus, and listed all those high-profile investors.
So they didn't try to hide the details.
No, and having someone like Thomas Lee, who's a public figure, plus those reputable funds involved, it adds this significant layer of perceived ethical oversight and accountability that just wasn't there before. It feels much more above board.
So where's the money going now? It sounds like a fundamental shift in capital allocation.
Oh, it's a radical transformation. Historically, money went into Bitcoin mining assets. They even did an $18 million offering back in June 2025 just to buy more BTC. This $250 million ETH raise, complete reversal. They are deliberately putting capital onto the balance sheet as an asset, basically copying MicroStrategy's playbook but swapping Bitcoin for Ethereum. The main activity now is treasury management, deciding how to manage that huge pile of ETH.
What about things like share buybacks or dividends? Any capital returns to shareholders planned?
They did announce a share buyback program back in December 2024, but details seem limited. As for dividends, no, they don't pay one, and nobody expects them to start. That's totally normal for a company focused on growth, reinvestment, and asset accumulation like they are now.
Okay, so given all this, what about return on invested capital, ROIC? How do we even think about that number now?
Historically, ROIC was deeply negative, like negative 29.43%, just reflecting how tough it is to run a small-scale, capital-hungry mining operation profitably.
Not great.
Not great at all. Going forward, it's really split. The legacy mining part, ROIC will likely stay low, maybe even negative. But the dominant factor now is the return on that $250 million ETH treasury. That comes from ETH price appreciation, plus whatever yield they can generate from staking or DeFi. So ETH held per share becomes the main KPI, effectively replacing traditional ROIC as the measure of overall value creation. It's a whole new ballgame for measuring success.
Right, a completely different metric to watch. Okay, let's dive into Chapter 3, financial analysis. This is where we probably see the most jaw-dropping changes. What happened to their market cap?
Extreme is an understatement. Almost unbelievable. Pre-announcement, market cap was just $28.4 million.
Tiny.
Post-announcement, pro forma market cap shot up to around $1.42 billion. That's based on the closing price then of $23.04. And the massively increased share count after the placement, they add about 55.6 million new shares.
Whoa, so from $28 million to potentially $1.4 billion.
Yeah, you might see other figures like 158 MAR and 100% if I have MNR reported initially, perhaps not fully baking in the dilution yet. But the key takeaway is this massive premium over $1 billion above the new pro forma book value, which is basically the $250 million in cash that they just raised.
So the market is valuing something way beyond the cash they just got.
Exactly. That premium is the market valuing the intangibles. The strategic vision, Thomas Lee's credibility, the backing of those top-tier investors, and the future growth potential of Ethereum itself. The stock is basically trading not in its current financials, but as almost a VC-style bet on a suture story.
That's a huge leap of faith by the market. What about traditional metrics like revenue growth and profit margins?
Well, historically, as a small, early-stage company, Bitmine showed rapid percentage growth in revenue, but off a tiny base.
Yeah.
$5 NMR revenue up 70% UOI or $890K up 570% UOI in earlier periods. With this pivot, those old mining revenue trends are almost irrelevant now.
Okay, and profitability?
Poor and volatile. deeply negative net profit margin, like negative 76% in Q2 2025. A consistent history of significant net losses. This was not a profitable company before the pivot.
And free cash flow. Could they generate cash internally?
Historically, negative cash from operations was the norm.
Yeah.
There was a surprising positive free cash flow number reported for Q2 2025, around 526K, but that seems to contradict the negative operating cash flow and probably came from some one-off balance sheet stuff. It doesn't signal sustainable cash generation from the old business.
Let's talk stability then. Earnings, consistency, debt, current ratio. How does that picture look now?
Well, consistency.
Yeah.
Consistently loss-making, historically. Like they haven't hit GAAP profitability. And the new strategy isn't really based on hitting near-term operational profit anyway, pre-financing. They were highly leveraged, 1.63 debt to equity, and had serious short-term liquidity risk with a current ratio of just 0.25. Basically, they were in a tough spot.
But the $250 million changes that completely.
Completely. That capital injection is transformative for the balance sheet. It wipes out the immediate liquidity risk, drastically cuts debt to equity down to near zero, and gives them massive liquidity. And again, no dividends paid or expected.
So for investors looking at this now, how do you even value this company?
Yeah, traditional PE is useless because earnings are negative. The most relevant way to think about it now is market value relative to net asset value, or NAV. And that NAV is overwhelmingly driven by their Ethereum holdings.
Right.
So the key metric becomes the premium, or maybe someday a discount to its ETH per share value.
Right.
Essentially, how much extra is the market paying for this specific publicly traded wrapper around a big pile of ETH managed by this team?
For folks familiar with discounted cash flow models, DCF, how does that apply here? Seems tricky with the two different business parts.
You're right, it's a two-part puzzle, a traditional DCF. You could really only apply that to the legacy mining business. And honestly, that would probably spit out a minimal valuation, low tens of millions maybe. It's almost negligible compared to the new treasury.
Like valuing a side hustle when the main business just got huge funding.
Exactly. The primary value component is the net asset value of that treasury, anchored by the $250 million they invested in ETH. So the baseline intrinsic value right after the deal is roughly that pro forma book value, around $250 million. The bull case needs to justify a big premium on top of that NAV, while the bear case would argue for a discount because of risks.
And what are the key assumptions feeding into that kind of two-part model?
Okay, for the small mining DCF part, you'd need assumptions on Bitcoin price, global network hash rate growth, BMNR's own hash rate, and crucially, their energy costs. And you'd use a very high discount rate, maybe 20–25%, because of all the operational and commodity risks.
Okay.
For the main treasury valuation part, the key drivers are the future market price of Ethereum, obviously, and then maybe estimating some annual yield from staking that ETH, say 3–5% as an extra bit of cash flow on top of just price changes.
This really sounds like a story unfolding in real time. Let's shift gears to Chapter 4, Market Sentiment. What's the general take on BMNR since this news hit? Any analyst targets yet?
Yeah, as of June 30, 2025, basically zero formal sell-side analyst coverage, no consensus rating, no published price targets. That's not too shocking for what was, until very recently, an obscure microcap.
So the narrative is purely market-driven right now?
Entirely. It's the market reacting to the news, the names involved, the potential, not based on established research reports yet. It's a sentiment play, pure and simple at this stage.
And how did the media react? Are they seeing this as brilliant or maybe reckless?
The general media tone about the $250 million, the ETH pivot, Thomas Lee coming aboard, overwhelmingly positive, excited even. It's consistently been framed as this brilliant, bold strategic move, bridging TradFi and crypto. It definitely led to a huge surge in positive sentiment. Not much public skepticism voiced, at least not initially.
What about technicals? Short interest, moving averages, what do they tell us?
Reliable short interest data is pretty sparse, again, typical for a formerly small stock. But the massive price surge, that was clearly buying pressure, not some short squeeze. The closing price of $23.14 was just dramatically above its 50-day average, which is around $7.37, and its 200-day average, too.
So a huge breakout.
Colossal momentum breakout, a complete structural trend reversal. From a technical perspective, it turned incredibly bullish overnight. It's a chart technician's dream, or maybe nightmare, depending on if you missed it.
This whole story really seems to hinge on who came into the picture. So let's look at Chapter 5. Ownership structure. Who actually owns Bitmine now? How much did that change?
The ownership structure was just fundamentally remade on June 30th. Before the pivot, institutional ownership was basically 0.00%. Insider ownership, though, was exceptionally high, over 76%.
Okay, so tightly held by insiders before.
Very. Post-pivot, That private placement completely reconstituted the ownership. The new key stakeholders are literally a who's who of sophisticated VCs and crypto-native funds. We're talking MOZAY, X, Founders Fund, Pantera Capital, Falcon X, Republic Digital, Kraken, Galaxy Digital, Digital Currency Group, DCG, Diametric Capital, Occam Crest Management.
Wow, that's a roster.
It's a completely different caliber of investor base now.
One of the most striking things here seems to be that shift in ownership itself is almost like a competitive advantage now. It's not just what they own, but who owns them.
Exactly. You've hit on arguably the company's most important new asset. For a company that historically lost money, its new competitive moat is its shareholder list.
Right.
The credibility, the network, the expertise, the deep pockets of this consortium. That provides a strategic advantage that's incredibly hard for anyone else to just replicate. It gives them unparalleled access to future capital, potential partnerships. The company's primary competitive edge now is quite literally who owns it.
So the original insiders were diluted massively then.
Oh, massively diluted. The balance of power shifted dramatically. But overall, ownership remains highly concentrated among this new elite group, which itself is a powerful signal to the market.
Okay, but every investment has risks. We can't talk about a bet this big without digging into those. Let's get into Chapter 6, risk assessment, maybe using a SWOT framework. Starting with strengths, what are Bitmine's core internal competencies now?
Okay, strengths. Number 1, world-class credibility. That comes directly from Thomas Lee as chairman and that whole list of elite institutional backers.
Yeah.
2, unique market position. They're arguably the first mover as a dedicated institutional ETH proxy on the public markets. 3, fortress balance sheet. That $250 million injection gives them huge liquidity and minimal debt. And 4, they still have that niche technical expertise in immersion cooling, which helps their legacy mining ops.
Okay, solid strengths. Now for weaknesses, what are the internal limitations? What could trip them up from the inside?
Weaknesses are significant too. First, massive shareholder dilution. Remember those 55.6 million new shares came in at $4.50, way below the current market price. Existing shareholders took a big hit on a percentage basis.
Right.
Second, that history of unprofitability. The legacy business consistently lost money, so it's not like they're building on a strong operational foundation. Third, execution risk. This is huge. Management just doesn't have a public track record of managing large crypto treasuries or navigating complex DeFi strategies. It's a new game for them.
And the key man risk we mentioned.
Exactly, key man risk. The whole investment thesis leans so heavily on Thomas Lee's credibility. If he leaves, that's a major blow.
Okay, weaknesses noted. What about opportunities? Where's the potential upside for BMNR? What could go really right?
The biggest opportunity is simply the continued growth of the Ethereum network itself. Their strategy is basically a leveraged bet that DeFi, stablecoins, NFTs, all that stuff will drive demand and value for ETH.
Makes sense.
Second, there's a potential for significant recurring returns through yield generation on their ETH, treasury staking, DeFi protocols, etc. That could be substantial. Third, that high-profile investor base makes future capital raising much easier, likely on good terms. And fourth, they could potentially use their highly valued stock as currency for M&A or strategic partnerships down the line.
And finally, threats. What are the big external challenges? Things outside their control that could derail this.
Number 1 threat, no question. Extreme cryptocurrency volatility. Their valuation is almost totally tied to the price of ETH, which we know can swing wildly.
Yeah, crypto winters are real.
Absolutely. Second, regulatory scrutiny. There's always the risk of an SEC crackdown specifically on Ethereum or on staking or DeFi activities that could fundamentally damage their model. Third, direct competition. What if a spot Ethereum ETF gets approved? That could erode BMNR's unique premium by offering a simpler alternative for ETH exposure.
Good.
Then you have general macroeconomic headwinds. Higher interest rates could hurt ETH's valuation. Inflation increases mining costs for the legacy part. And finally, geopolitical factors, disruptions to energy markets impacting mining, or just shifting global regulations around crypto. Lots of external risks.
Okay, that covers the landscape well. Let's tie it all together now with Chapter 7, conclusion. Can you summarize the key bullish points again? Why is this story so compelling to some?
Sure. The bull case is really about a brilliant, timely strategic pivot. They transform from a struggling miner into this large-scale Ethereum Treasury. They reposition themselves as a unique institutional-grade ETH proxy. And crucially, this move was validated by Thomas Lee and that incredible consortium of backers like Founders Fund and Pantera.
Right, the validation is key.
That backing provides capital, yes, but also credibility, network, expertise, a competitive advantage. It's a differentiated public market play on Ethereum's application layer. its utility, rather than just Bitcoin's digital gold story. Plus, they now have a rock-solid balance sheet and the potential for real yield generation through staking.
Okay, that's the bull case. Now the bear case. What's the biggest counter argument? The biggest yeah, but? What's the most significant risk that could sink this?
The bear case starts with the fact that success is almost entirely dependent on the price of ETH, which, as we said, is notoriously volatile with massive potential drawdowns, the legacy business,
Yeah.
unprofitable, and basically insignificant now compared to the Treasury.
Okay.
There was huge dilution for prior shareholders, and the current stock price represents a dramatic premium over where these big institutions got in, $4.50. That's a huge gap. And then there's just immense execution risk for management trying to run this new Treasury, navigate DeFi, handle staking, all while the regulatory landscape is so uncertain.
And the biggest single risk?
I'd probably say it's that combination of extreme ETH price volatility coupled with the regulatory uncertainty surrounding Ethereum and activities like staking. Either one could seriously undermine the whole strategy.
So, putting it all together, what's the estimated intrinsic value range here? How do we even begin to put a number on this now?
Yeah, the intrinsic value is definitely a composite. The legacy mining operations, minimal value, low tens of millions at best. It's almost a rounding error now.
Right.
The primary value driver is the net asset value, NAV, of that treasury, anchored by the $250 million they put into Ethereum. So the baseline intrinsic value right after the deal is roughly that pro forma book value, centered around $250 million.
Okay, so $250 million is the floor, basically.
Kind of the anchor point, yeah. The bull case requires believing that management skill, the Thomas Lee premium, their strategic position warrants a significant premium above that $250 NAV. The bear case I'll use for a discount because of the execution risks and the sheer volatility of the underlying asset.
So, to wrap up, how does the current share price compare to that estimated value range? Sounds like there's a big gap.
There is a huge gap. Bitmine's market cap exploded to over $1 billion, right?
All right.
That represents a substantial premium, more than 4 times its pro forma NAV, around $250 million.
4 times NAV. Wow.
Yeah. That premium is pricing in enormous optimism. It's pricing in the new leadership's credibility, future ETH growth, successful yield generation. An investment in BMNR today is not a traditional value investment. It is, unequivocally, a high-risk, high-reward, almost venture capital-style bet on management strategy and Ethereum's future success.
So the market's already priced in a lot of good news.
It really appears to have priced in years of flawless execution and significant ETH price appreciation already. That leaves very little margin for error. Potential investors really have to weigh this unique opportunity against those considerable risks, the volatility, the regulatory clouds, and that already very lofty valuation premium. It's a bold play, no doubt, but you are definitely paying a premium for that boldness today.
This deep dive into BMNR really makes you wonder, with this new blueprint laid out for a public crypto treasury, are we going to see more companies try this? Or will this bold pivot end up being a unique outlier in the market? Food for thought. If you found this deep dive valuable, remember to like and subscribe to Stock Analytics AI.
Yeah, and members get priority deep dives on Ticker. We're actually covering all of the S&P 500 stocks over the next few months, and members get exclusive priority access to those. If you just want a one-off deep dive on a specific company, you can always drop us a super thanks. And just the usual reminder, this analysis was generated by an AI system. It's for educational purposes only and should definitely not be taken as financial advice. Please, always do your own research or talk to a qualified financial advisor before making any investment decisions.